There's a massive distinction between the sentiments of the people in your area and the regulation. And a lot of miners that we speak to who are moving into the construction phase, they're like, yeah, there's a lot of unrest, but we're doing what the law says. And I think that disregard is negligent.
The OEMs, the traders, they're all in a battle for offtake right now, except there's not enough, as Paul mentioned, there's just not enough offtake to go around.
West Africa is the only place where the value being discovered is larger than the money put into the ground.
I think what we're going to see actually is a new group of, shall we say, junior majors coming through.
Let me invite our panel to the stage. Charles Bond of Gowling is going to anchor this one. And I have Amanda Van Dyke from Arch Emerging Partners, Willem Middlecoop from Commodity Discovery Fund, Paul Quirk from Lionhead Resources, and Luke Alexander from Newcore Gold, and John Mayer from SP Angel. So a great selection of experience on the panel to take us through more on the discovery and construction end of the industry. And I'll hand over to Charles. He's got some notes to take us forward.
Okay, morning everyone. Small room this morning, but we might have a few more people trickle in as we go along. We were just saying probably more people on the panel than there are out there in the audience. Okay, for those of you who don't know me, my name is Charles Bond. I'm head of our global mining team at Gowling WLG. We're an international law firm and we're a sponsor of the One-to-One. Have been from day one, actually. We're really happy to be here. But over the last 20 years or so, I guess we've been working with numerous junior companies. And we understand that, you guys are the lifeblood, really, of the mining industry and always have been. And I'm learning to understand that even better now because I've joined the board of a small junior mining company myself. We're doing copper, but on a different continent. So I understand some of the challenges that juniors now face. But this morning's panel of esteemed panel members are no strangers either to the exploration stage of the industry. And we're going to look at some of the challenges and the opportunities, I think, in discovering Africa's next world-class assets. So the aim of this morning's discussion is really to provide some insights on how crucial exploration is at this point in the metals bull market. And further how the different funds establish their investment criteria at the moment. So I'm going to kick off with the first question, which is, at the moment, what factors are making it more challenging for mining executives in the sector? So the obvious person to aim that question first is Luke, given you're our mining executive on the board.
Yeah, I think, across the world, some of the challenges that we've seen, finding skilled labor, I think would be a big one. Rig availability would be another. I think also, assay turnaround times specifically for exploration companies is always something that's challenging. I know North America, Australia, that's been a big challenge, 12, 14, 16-week assay turnaround times. That can really have a impact on projects, not getting those assays back in a timely manner, as well as skilled labor. I mean, at the end of the day, if you don't have skilled labor on your project, that can be a major challenge for companies. So I think those would be a few of the things that are really impacting companies from an exploration perspective around the world.
Okay, I'm going to throw this out to the other people. We'll probably go in order. John, do you want to have a...
Look, before I start, I'm just going to say yesterday was amazing. It's so good to see so many people at this conference. Clearly more guys coming in this morning, but incredible that we've come out of COVID.
Exactly.
I mean, thousands of people here yesterday. So it's great to see everybody back in action. The challenges of the mining industry are always in front of us. But actually it's been a good market for raising money for explorers, for miners, especially the general public, the family offices, the wealth funds. They're all coming in. I noticed there are a lot of new types of investors coming to this conference. When I went through the list on Friday night, because I was a bit late in organizing my meetings, I got 21 meetings in 2 hours. I couldn't believe it. And lots of new types of finance, offtake, streaming, royalties, plus just new funds coming in, which is great. And yeah, the challenge for the industry is always how to attract new capital. In fact, if anything, we're not having to fight to do that at the moment, because it's coming to us, which is extraordinary. Now, a lot of that money is looking for near production projects, and we're always working to bring these companies closer to production. And it's a long old process. You've got to go through exploration, discovery, feasibility, and then of course the difficult bit's always been the finance. But if you can get a project to feasibility, and if it's any metal that's remotely connected to the battery space, then you're in a good place. We've even got the major miners. I mean, I'm not just talking Rio Tinto, BHP, Anglo American, but the next tier down are here hunting for projects. Good to see that they're starting to get some dirt under their fingernails and coming out of their offices. But no, it's not looking too bad. I know there's a bit of turmoil in global markets at the moment, and we're always very nervous that the music might stop, but actually doesn't seem to be that way. There's too many investors who want to be in this space. They know the electric vehicle revolution is here. They know that we need to generate new power from wind farms, from solar farms, from other forms of renewable energy, and you've got to have the metals for it.
Okay, thanks, John. Amanda, from your perspective?
From my perspective, the explorers are the lifeblood of the mining industry. Nothing sort of ever gets into production and into a vehicle or a car or a wind turbine if some geologist didn't go out there and drill some holes. I think our challenge is that, as was mentioned, they want things to be fast-tracked into production as quickly as possible, and the timeline from exploration through development and up to production, they want it to happen a lot faster. But the market, the financiers that are there to do that, they require the standards and are much more stringent for getting into production these days. The requirement to establish a social license and an environmental license to operate, it can't be had. And in the past, you'd go out and explore, you'd drill a lot of holes, get yourself a decent resource, and then you'd start thinking about, feasibility studies and environmental baseline work. I think increasingly the explorers, even though they haven't necessarily found or developed like a full-scale asset yet, they need to go and start doing some of that other work, or else they won't be prepared. And if you haven't done that work, you won't get the next stage of funding. So environmental baseline work and establishing a really good social license to operate, and your relationship with the governments in whatever host countries you have, has been a challenge for an exploration community that traditionally just focused on, developing a really good resource.
Yeah.
So I think that's something it's a new paradigm in how they have to consider of requirements in the exploration space that is making it a more challenging environment, because you need to just wear a lot more hats.
Yeah, Willem, from from the Commodity Discovery Fund, the ESG requirements now, even for the early stage explorers, is that something you concentrate on when you're looking at your investment portfolio?
I was at Mining in Daba yesterday, and I really couldn't take it anymore. Everybody was talking, everybody was being so political correct, mentioning ESG, climate, CO2 in every sentence. This is a discovery investing panel. I'm happy because we were one of the pioneers in discovery investing 15 years ago, and we see quite a bit of traction. We see very strong inflows from high net worth in Europe, 50 million euros a year for a small fund like ours. So there's enough money now, and these high net worth investors are not asking me questions about ESG. And when they ask questions, I say, we only invest in listed equities. So then you can be quite sure that there's no child labor or whatever involved. But to come back to the earlier question, what's the problem for the industry in exploration space? I think there's enough money now for good projects, but not enough good projects.
Yeah.
And so even we are one of the very few specialized exploration funds, even we stopped investing in pre-discovery. So all these companies coming to us, even here before we started this panel this morning, companies, pointing to themselves. Well, we say, no, sorry, we only invest in proven discovery. So it's very hard for all these 1,000+ exploration companies hoping to make the next discovery to find enough funding.
And Paul, from Lion's Head point of view, you normally come in the game later than the exploration side?
Sorry, yeah. So we like to invest in the construction phase of the mining projects, but I'd say that we, as a family, I come from a mining background. We've been generationally in the mining industry. I'd say when I look at successful exploration projects, there's been a very clear focus on what outcome everyone ultimately wants, which is a path to cash flow. And I find that there's quite often, and Amanda alluded to it a little bit earlier on, there's quite often in the early stages of exploration, a disconnect between finding tons, ounces, whatever it is in the ground, and not focusing on whether those will be truly economic. And so people spend a lot of time focusing on building up resources without focusing on the economics a little bit too early. And I'd say, if I could give any advice to explorers, don't worry too much about building out mega projects. Really focus on the economics of the grade and the quality of the asset, and even on the early stage part of the mining, the mine plan, because that's as Amanda says, what'll get you the funding to get you into cash flow, and allow you to get you into production and stuff. So it's not just focusing on scale, but also focusing on quality at a very early stage. I think it's important.
Okay, I'm going to come back to you, Luke, just on, because you were interesting from the executive's point of view of what the kind of the risks on the ground are. You mentioned rigs, assays, labor. What about some of the other elements like technology maybe, and also we should probably talk about the politics as well. How are those affecting? I know you've got an exploration project in Ghana, which is a relatively stable jurisdiction, but you've probably got colleagues in other jurisdictions in Africa. How are you seeing those playing out across the continent?
Yeah, I think tying it into the investment theme, obviously investors will look at countries around the world and they'll rank those countries based on political stability as well as security. I mean, we've seen a number of coups in countries across Africa, and for a number of investors, those just become no-go jurisdictions. And as a result of that, you can have the best potential project in the world, but if it becomes a no-go jurisdiction, then, that becomes a non-starter. So I think, security is one big thing. And then, a clear framework for the mining industry and the exploration industry is also something that's hugely important in terms of companies that are going in, spending millions of dollars, or as they get to the development or production stage, spending hundreds of millions of dollars. They want to know that there's a very clear framework in terms of what the taxes are, what the royalties are, what their ability to, operate in the country is. So having those elements in place, I think from a jurisdictional perspective, are very important for investors, and obviously very important for mining companies to attract capital in the jurisdictions that they're operating in.
Willem, from your point of view, are any of these West African companies now becoming uninvestable from your point of view?
We tend to be metal agnostic, and also then there are very few parts in this world where we don't invest. Russia was one of them, so we don't have any hits there compared to some of the London-based funds. So West Africa, we're perfectly fine there. You have these scoops once in a while, but then everything stays the same. There's a new ruler, but most of the mining operations aren't affected by this. And actually, I saw a study recently in which there was they compared about the amount of money being put in the ground for exploration and the value discovered because of these exploration investments. And then West Africa is the only place where the value being discovered is larger than the money put into the ground. Right. So West Africa is the place where you can still make good discoveries rather easily. We also like Australia because Australia is overlooked. Australia is underexplored, and some of our best discoveries are in Australia. But we love West Africa as well.
Different kind of political situation in Australia. But Paul, just coming back to you, I mean, when you're obviously as a later stage investor, probably more exposed to some of those political risks, I guess, because it's once you're in for a while. And are there any, from your point of view, are there some countries that you look at that are much better than others, or are you agnostic as well?
No, so so Lionhead Resources is an equity investor in construction projects. So our family has built over 12 mining projects over 2 generations, and we've exited probably $8 billion of assets over our both mine and my father's lifetimes, and a lot of it is focused on cash flow, and obviously cash flow is heavily affected by politics. We have done mines in Africa as well as OECD jurisdictions. Where we've actually had more headwinds is in we had a coal project in Canada that we couldn't get permitted called Coalspur. And we've had recent issues with a zircon project that we've invested in Victoria, where the planning minister has given us uphill. So, interestingly, people always say that the politics in Africa is difficult, but we've actually found we've had more problems in Western countries at getting things across the line with the regulators. But I do think, like to Amanda's point, I think a lot of this stuff needs to be thought about very early on. Like if you are exploring over farmlands, you're gonna have problems, and everyone's like, oh yeah, it'll be fine. It's you have to start addressing those social, governmental things very, very, very early on. Don't believe that reallocation, RAP plans are going to be easy when it's clear that you have there's evidence on your property that you're going to have issues in the future.
Just on from that, we're a slightly earlier stage investor, and we're like development stage. So once the explorers have found something, we help them develop it into an asset that can go into construction and be financed into construction. And as Paul said, if those explorers, when they pegged that ground and got their initial licenses, didn't do it in the right way, if they haven't properly established security of tenure, if they haven't properly interacted with whatever the local community it is to build up a social license to operate, it's next to impossible to develop that asset.
Yeah, I agree with that. If they skip cut corners and stuff, you're always going to have problems.
And for people who are kind of coming into the continent maybe for the first time, what would you recommend, Amanda? Should people be getting an expert in there? Are there kind of companies who are now advising specialists on this, or is it something you can battle yourself?
My experience is, having sort of watched the ones that work versus not. I mean, Mali has had a number of coups over the last 10 or 15 years. And a number of the miners have managed to sail, and explorers and developers have all sailed through it because they had established a really good license to operate with a relationship with the government and a relationship with the local community. It can be done. And the guys who do it best tend to be the guys who have done it before. Experience in our industry, not just experience, but successful experience, a track record management is really important. And there's no one size fits all formula for finding and developing a mining project. It's every project is very customized.
Yeah. Can I just add to that? There's a very different distinction between regulation and sentiment. And like a lot of people get that wrong that we speak to. So they go, we have covered all the laws. You know, we are applying for all the licenses. We have got a RAP plan in process where we're going to move this village from here to there, or, you know, we're going to build the mine. But there's a massive distinction between the sentiments of the people in your area and the regulation. And a lot of miners that we speak to who are moving into the construction phase, they're like, yeah, there's a lot of unrest, but we're doing what the law says. And I think that disregard is negligent, or almost negligent, because it doesn't matter what the law says when you're dealing with populations and stuff. I mean, we've moved many villages and different things, and you have to go to the people themselves as well as the regulator when you're dealing with this stuff. Otherwise, you're going to come across it.
I would also say that the explorers are the first ones to get there. The first interaction they have with the company, no matter how many times it changes names, is with the first explorers that showed up. And that relationship between the explorers and whatever community is and whatever district they're in, is far more important in determining their long-term success.
Is it vital, do you think, to have a joint venture partner on the ground who's kind of sharing some of that risk?
No.
I think it's important to quantify and to make notes of the work that's been done, because most of the companies in the mining sector, the explorers, the developers, actually do amazing stuff, but it goes unrecognized. So we're working with Jamie Strauss and his company called Digby. They're assessing and quantifying and creating baseline ESG work, which is what the big investment funds need going forwards, because so much new capital is being allocated and directed towards the better ESG type stuff. And also as part of what they do, they're also giving good advice. So this is real expert advice from people who are trained and experienced in environmental, social, and governance issues. I mean, what we tend to see in London is more of the governance stuff being applied to ensure that the board is made up properly. But what I feel is more important is what happens on the ground. And as Paul talks about, you know, moving villages, it has to be done in the right way. It's not about what the rules and regulations say. You've got to ensure that the people are fundamentally happy with what's going on. And then that needs to be quantified and expressed so that the bigger investors, when they come in, feel very comfortable with it. I mean, I've never seen any mining company that we've ever worked with, you know, employing any form of child labor, for example. But for some reason, everybody needs to have that box ticked.
Yeah, I think just from an ESG perspective, I think what it's really going to highlight a lot of these companies like Digby and others who are producing these reports is that, you know, TSX, ASX, London listed companies have always been very good at ESG. You know, all stakeholders benefiting in a project, I think, has been fundamentally for most companies that are listed on any of those markets is something that's at the core of the company. And they ultimately recognize that, you know, all stakeholders benefiting is the best way to push these projects forward. I think, you know, this movement is going to really highlight that. All that has been happening for years, but now, as you say, those boxes are being ticked. In terms of, you know, community relations and all the rest, I mean, for us, all of our employees on the exploration side are Ghanaian except for one. So, you know, the locals who run all of our ESG programs, they come from the local communities. They've lived in those communities their entire lives. So all of those things, having, you know, deep-rooted connections with the communities is something that I also think is hugely important, because flying in and out and trying to, you know, opine on what's good for the community, I think is the wrong way to do it, as opposed to having people from those communities, you know, working with them to really guide what you do from an ESG perspective.
If I could just come in and follow up on something John said. In my experience, the explorers who do this initial work and get that initial social license to operate in country tend to do, more often than not, very, very good work. And they interact with the governments and they interact with the local communities. The biggest mistake I've seen them make is not documenting that. not documenting what they've done at every stage of the game. Every time they speak to a community leader, who they speak to and what they discussed needs to be written down to establish that sort of to establish what's been said. And not only is it going to become necessary for future permitting and licensing and relocation, like what was said, what was promised. So it'll become important to the licensing and getting your final ESIA. But more important than that, it helps you not make small mistakes because you know what someone else promised them. The biggest issues happen when the explorers said one thing and, they hire some new firm to do a feasibility study or a permit or this or that and the next thing, and they don't know what was said before. Because these communities and these governments, they remember everything.
So like having a kind of internal ESG audit that you can bring out at a later date. Okay, I'm going to shift gears a bit and change the topic slightly. Every cycle we have, and I think everyone agrees we're on an up cycle now, the position of the majors changes a little bit. Sometimes when exploration is and the capital's weak, they come back into the game. When it's strong, they tend to exit. Where are you seeing the majors now? What's their contribution to exploration? Are they going to just leave it to the juniors again this time around, John? Well,
the majors have been pretty absent from the market for many, many years. They're quite rightly focused on big iron ore projects and stuff like that. That's where a lot of their cash is coming from. But we have seen them developing quite large teams in recent years. Mainly they assess other people's projects. Mm-hmm. They look around at all the juniors. This has become quite well established. And then they go and do joint ventures, or they might even make the occasional outright acquisition. And certainly if the size of their teams is anything to go by, they're growing in that area. I think what we're going to see actually is a new group of, shall we say, junior majors coming through, because the majors, I think, are struggling with the battery metal space. They've got the metallurgists, the mining engineers, the experts that the industry needs, but they don't really have the focus. We saw Rio Tinto in Serbia, where they had problems with Jadar, and it was literally the next day after they got chucked out of Serbia, they went and bought a project in Argentina. Now, I'm not going to go into whether that will work or not, but they're not really doing a lot. We used to assess and value the other stuff within Rio Tinto. Nobody even bothers now. It's too small for them. And of course it's too small for the board, and therefore it'll be too immaterial for their investors. So you have to have other groups that are going to come through. And I suspect what will happen is the talent out of some of these major companies, in fact, we do see this, is moving more into the junior space anyway and bringing the projects through.
If I could add on that point, if you check out history, some 50, 60 years ago, I think 70% of all discoveries were made by majors. And now 70, 80% are made by juniors. And the majors, think they can cherry pick and only invest when there's a great discovery. But it's very understandable, but this is bad for the industry because there isn't enough funding available for the very first stage, as we've said before. So you should almost think that it's time for a new business model for mining, and because the juniors are really struggling. And like you said, we're in the start of a new bull market. Doesn't feel that way if you look at the stocks yesterday, but yeah. I think that's true. And still so many juniors are struggling, and even juniors with quite good projects, but who haven't made a real serious discovery yet. And you can meet them here on market cap 5 million. They have got good targets, but only 5 million market cap, and the cash is 600-700K, and they don't know what to do now.
If you had to put your finger on maybe a mid cap who's going to shift in to be the new transition metals major, is there anyone who's kind of going to occupy that space, or is it going to be is that a push too far?
Especially at the high end, if you look at the Newmans and the Barracks, they're almost we don't see them in any early stage projects. They only that, like John said, their market cap is so large. They only want to invest billions and billions. Yeah.
If I could jump in there, I think there's been a disconnect in the industry for a very long time, and the majors moved out of exploration because they weren't particularly good at it. The majors are producers, and the skill sets and the people who know how to produce and mine on a regular basis are completely different from the skill sets of explorers and developers. And they weren't particularly efficient at finding things, and so they just moved out and constantly approving tiny, like lots and lots of tiny little budgets for exploration. The boards of multi-billion-dollar companies just didn't want to get involved, and they weren't particularly good at it. So they've left it to the juniors and said it's much easier for us to agree to, a $500 million takeout once you've already found it, developed it, built it, than it is for us to go and do the work. I'm not sure if that model is going to work because you have a lot of underfunded juniors running around. But I think the reason that they stopped doing it is because they weren't good at it.
Let me give you a couple of names, because these companies, when you get a really good small, mid-size company that comes through, it really comes through fast. So when I think through my career, First Quantum Minerals, I remember when it was a tiny company, and it's definitely out there supporting juniors and looking around quite seriously at what's going on. Ivanhoe Mines, okay, it's not small anymore, but guess what? It was, and it's been incredibly successful in its exploration and in the way it works with other companies. Beamer Gold was brilliant, absolutely fantastic for investors. They must have made hundreds of times their money if they'd stuck with that. Their latest incarnation is BE Metals. So BE Metals is effectively the exploration arm that came out of Beamer Gold and B2 Gold, both of which were fantastically successful. So yes, these companies are coming through, and they are the companies to find and to run with.
John, these are great examples, but there are very few. Besides the names you mentioned, there are very few who have this model.
I think there are going to be many more. I think we're set into a market where we've got some amazing explorers out there. And I think when we talk about the failure of major mining companies to discover stuff, it's partly because really great geologists don't fit in a box. They don't fit within the corporate structure of a major mining company at all. In fact, they'd probably get fired within a week. People like Nick Mather of SolGold, sorry, Nick, he's a genius geologist, but he isn't going to fit in a major company on any level.
He doesn't even fit in his own company.
Sorry if you're watching this at home. Yeah.
No.
I think we did see kind of 2017, 2016, 18, a wave of, mid caps and majors taking toehold positions, 9.9, 19.9 type positions in a number of juniors. Market rolled over on the back of that. And, a number of them were held, holding all these positions, and the last one there to ultimately finance them. So I think there is a bit of a reluctance for a number of the mid caps and majors to come back in and take those toehold type positions, except for in a very select number of companies as a result of what we saw, 2016, 17, where that didn't necessarily work out for a lot of mid caps and majors as a strategy.
Okay, well, if the majors aren't really contributing their share, I mean, one of the perennial issues for mining execs is cash, right? So, I mean, at the moment, it's not, well, it seems to be out there. It's just getting hold of it. So I'd be interested on your take. And John, you were saying at the beginning, you're seeing more kind of different types of instrument, different types of availability of cash for juniors.
I want to go back to something that was said earlier about cycles. The mining sector and every sector actually works within a cycle. And at some parts of the cycle, we see juniors, explorers coming through and making those early discoveries. Then you get to a point where there's a whole bunch of these companies starting to develop what they're doing. And then you get to that build and finance type side of stuff. So we've certainly got a whole lot of companies in the financing to build set part of the cycle right now. Then I think we've got. Then I think what we're also seeing is a bunch of stuff at the early end of the cycle where we need to make discoveries. We know we haven't got enough copper, enough lithium, enough graphite. We've also got to develop some new technologies because smelting and the old processes of refining metals are not acceptable in the West. That's why it's all done in China, because we didn't want to do it in the West. We wouldn't permit a lot of this stuff. So we need new technologies to come through, and that will support, let's say, rare earth companies. If we could talk about a whole bunch of rare earth companies, Rainbow Rare Earths, Macango, Pensana, these companies, they're all working with new technologies that will help this stuff come through. So we know that the world needs to make more new discoveries. There's a whole bunch of investors out there who know that. We're seeing a lot of new private investors in the UK. We see a lot of, we see more family offices coming in. And we're also seeing a lot of traders. There's a large number of traders that have come to this conference looking for offtake, looking for opportunities to finance that last mile in the build of a company.
You even see the end users entering mining now. Look what happened with Talon Metals, who have a great nickel discovery in the US. Tesla made a deal, a funding deal, offtake agreement very early on with Talon Metals before any major was doing any serious work with Talon. So that's a push from the end user, and that's a sign about the seriousness of the shortages arriving. We're starting this era of shortages, and that will be monstrous. We did some supply and demand studies, especially after 2025. You'll see massive shortages in many metals.
You're absolutely right there, and I think that's why we're seeing these traders and off-takers they're being driven to us. Volkswagen stole a member of my staff, so to go out and find more graphite, more cobalt, more everything. Frankly, they know that they need these metals. They are frightened that they're not going to get them from China. They're not getting them from Russia right now, that's for sure. And there's a problem. There's just not going to be enough coming at us.
And this makes China much more powerful. There was a recent analysis by Credit Suisse that they said the People Bank of China is actually now the world central bank of commodities, because they can do the arbitrage with all the Russian commodities. So this has huge geopolitical consequences and shifts as well.
Yeah, are we? That's a good question. I mean, are we going to be seeing at these conferences in the coming years more OEMs? I mean, it'd be interesting for one-to-one to tell us, how many actual OEMs are attending the conference this time round. Phil Clegg from Orion yesterday was on the panel, said he's getting weekly calls from them now, wanting to invest directly. Are they your competition now, Paul, Amanda? Do you see them lining up against you for investments?
No, we also speaking to Volkswagen actually. Yeah, so they I think what happens in these cycles, we've had and everyone's been speaking about this, the supply demand dynamic in the sector, but we've had decade now plus underinvestment in the sector, and that coupled with quantitative easing, batterification, all that kind of stuff means that we've got this massive supply demand imbalance that everyone is talking about. The problem is that what people don't understand, I think, is everyone goes out and goes, well, let's just sign offtake agreements with all these mines. But, there's just not enough producing assets out there, which is the opportunity for the explorers right now. And the thing that Volkswagen, I spoke to the head of their battery division, and he was like, we'll take any, cobalt and, anything you can get us. I'm like, all right. They're actually going to have to eventually start owning the mines, and after they own the mines, they're going to have to look further downstream upstream and start. Is it down or up? Downstream, and start owning the exploration projects, because there's just not enough supply. There really isn't enough supply, and people think that they can just buy the offtake, but they can't. They're actually going to have to start owning the assets, and that's a very exciting thing for, I think, the whole industry, not only the producers, but also the explorers, is that,
So they'll be taking all the good geos as well as the analysts, John.
Yeah. But they said, the guys at Volkswagen said to me, they said, we'll do anything for offtake at the moment, because literally we're at battle for raw materials at the moment for our batteries.
The OEMs, the traders, they're all in a battle for offtake right now, except there's not, as Paul mentioned, there's just not enough offtake to go around. It's very difficult to get your hands on an offtake. And the problem is often they secure an offtake before the mine's been sufficiently developed. And there's a lot of people who have offtake to mines that are never going to get developed because they go too early in the cycle and they don't pay attention to the fact that developing a mine is complicated.
Yeah, that's what I was going to actually add. What they don't understand is that it takes, as we all know, it takes 15 years from the time that you start your soil samples, termite samples, whatever, to final production. We all know it's a long walk to freedom. That it's 15 years. The difference between the oil and gas sector and in the past is when you had cycles and that is you can turn on that sector quite quickly. You can't just turn on the mining sector. It takes 15 years to catch up. So that's why I'm a big believer of this cycle that we're moving into, and because we can't just switch on production tomorrow.
I think that's also why so many old mines are being renewed and refreshed, because although you can't bring on something new, you can restart old mines very much faster. And what we're seeing now is the financing is happening very much quicker.
Yeah.
Whereas it might have taken 6 months to a year to get the development finance for a mining project, I think that can happen in a matter of weeks now.
I agree. And I also think that will flow down into the exploration side of things, because you're right. Historic mines are getting switched on right now. Near production assets are getting financed very quickly, but there's only so many of those. Trust me, because I'm looking at them, and there's only so many good ones. And then eventually it's got to flow down to the exploration world, I do think.
I think one of the other places that exploration is going to actually get funded is we're seeing this with a lot of so we look at the developers, the guys who have a project that we know we can get into production, but they often, the explorers, the nature of exploration is you start with a bit more of a scattergun approach and things that look geologically promising. There's usually a tiny bit of extra budget in there. So you work hard on developing a main project, but studiously in the background, they've got geos that are developing up, usually in the same region, but not always, stuff in the back. I think the developers will probably be the biggest discoverers of the next generation. Pure exploration is still complicated, but once you've got one project you can sink your teeth into, you can usually find a little bit of extra funding to keep developing in the region.
Luke,
I think there's a huge amount of, to Paul's point, a huge amount of development capital out there available. I mean, you look at the amount of money that's flowing into private equity to go out and develop projects, but there's a scarcity of projects out there, and inevitably that money will flow down into the exploration sector. And yes, maybe it goes through companies that have been developed, and then there's additional capital available for them, or from the cash flow to ultimately fund it. I think the other thing we've seen is, since 2008, and all the rules that have come into the market, especially around liquidity, a number of the traditional funds can no longer invest in companies with less than a $250 million market cap or less than a $100 million market cap. If you go out here and meet with all the companies here today, the bulk of them aren't going to be investable, regardless of how much the analyst or the portfolio manager likes the companies. The computer says no, because you're less than 250 million. So I think, back to a number of the comments that have been made here today, there's these other pools of capital, whether it's family offices or high net worths or off-takers, who are starting to recognize that disconnect between the explorer and the developer, and that money starting to come from other areas, because a lot of your traditional funds, whether they're in London or New York or Toronto, can no longer invest in sub $250 million companies. So it's a very interesting change we've seen in the last kind of 10 years in terms of the new pools of capital that are out there.
And I think it's important to say that this new capital is often coming from within the industry. It's people who've made extraordinary amounts of money by investing early stage in things. Those investments have given them hundreds of times returns in some cases. I know I've got one actually that hopefully will reap a reward sometime soon. And we see this in Australia. There are billionaires in the sector now who are able to run around and use their expert knowledge and expertise to put that money back to good work in the sector. And these guys do it over and over again. I could give names. I think it would be embarrassing if I did. But yeah, these guys are out there and they're supporting the industry, and it's good.
Well, and I think the, billionaire investors that we've seen take, significant positions in a number of junior companies, those investors don't have the same restrictions that you get with a private equity fund, which might have a 7 or 10-year life. They don't have the liquidity constraints that a number of other funds will have. And as a result, they can look at it as a 15-year from grassroots to build, and they can put that capital in and know that they aren't going to be able to take it out until it is a, production scenario. So I think that's an interesting one that, those investors with a long history in the sector are looking at it with that kind of 15 to 20 year mindset.
I'm just going to stop you there because we've only got 5 minutes, and I'm conscious we've got an audience, so we should probably just ask if anyone's got any Q&A. Sometimes we get a few. Just looking around, anybody got some Q&A for our panelists? No, I thought that might be the case. Oh yes, there's one here. Here we go.
I'd like to say my experience as a head of exploration, long-time exploration, I'm really impressed with this panel. You've touched everything that makes it from grassroots through development.
Well, that's good. And I hope that this will be on one of the channels. I'm not sure. So for the mining execs watching this, feel free to get in touch with any of the panelists at some point. Sorry.
Well, I just wondered, a bit of a sort of selection of views, maybe coming out, but if the world does have a bit of a slowdown now, maybe a bit of a slowdown, what's happening with the bonds, yields, QT, whatever it is now, which are the metals that are going to actually then have a little bit of surplus in the near term, and which are the ones which is going to go straight through and get some very quickly? Because I think it's no doubt we've got a bit of a negative slowdown right now, but then we've got this whole sort of electrification.
Do you want to take on, Will?
I think within the base metals, you'll see a softening of demand. Battery metals will stay very strong, I think, because there's so much scarcity and there's so many end users who want to build supplies. But I think base metals, the zincs, and maybe even copper, if China will get a severe downturn, that could really cause for correction in the base metals. Yeah. Well, copper, if you look at the longer term fundamentals for the copper market, is so strong after 2025, and that's only 2 or 3 years out. And with the debasement of currencies and the inflation, I think all corrections also in copper will be bought by the huge traders and also China, because they will even copper could be used as a monetary metal because of the debasement of currencies.
I think prices are being driven more by traders and sentiment this week, and I think in the current environment, because what we're seeing is, although China is slowing down with all its lockdowns, and there's a disruption to manufacturing over there, and in fact, often the workers are locked into the factories. I'm not saying that in a bad way, but in order to keep everything going, they're quite dedicated like that. But what we're seeing is, because everyone's suffered so much supply chain disruption over the last couple of years, a lot of companies are building up inventory levels so that they can protect themselves. And these companies are taking a view that it's more important to buy the metal now and store it than to worry about what the price is going forward. So they're not worried about if the price is going to fall a bit. They're probably worried the price might go up again, and they're protecting themselves. But the most important thing is to make sure the metal is actually there at the factory gate.
We saw that in the March 2020 crash, when China used the crash to buy unlimited amounts of copper and other metals.
I think that the problem with this whole new green metals super cycle is that it's hockey stick ended, to use a Canadian term. Right now, all of the OEMs, especially in Europe and North America, have made all these forecasts on how many electric vehicles they're going to produce, and and the major governments have signed all these accords on how clean all these metals need to be. I mean, they're building all the factories now, but the problem is when they actually start needing the metal to produce the actual vehicles, I actually think they're going to come up incredibly short. And that's probably going to happen 2025, 2026 is when we see the major crunch happening, when all of these factories have been built and suddenly they need to start producing cars for which they need metal that simply has not been secured.
Okay. Any more questions? Oh, sorry. There's one over here. Sorry. No.
Well, the whole lithium supply demand dynamic changed. I mean, there's so much demand from the new gigafactories, from existing gigafactories trying to ramp up their own production. That demand is being pulled through by Tesla and all the other companies trying to produce EVs right now. It's difficult to know when that stops. I think we're going to see that in graphite going forwards. I just can't see how there's enough graphite processing or enough underlying graphite production. And I've got no idea when lithium prices might pull back. They just seem to keep going higher. So
But
whilst
John,
the demand's there, it's good.
John, there's no shortage of lithium worldwide. There are mass amounts of lithium, but there is a shortage on cobalt. There is a shortage on high-grade nickel. There is a shortage on copper. And that's a huge distinction.
Yeah, I hate to stop it there, guys, but we're out of time. So but it's we probably take this one outside, as they say. But thanks very much for the panelists. Really appreciate your time.
Thank you.
Thank you for joining.